It's crazy how many people in the institutional world are still stuck on zero. Literally zero. It's 80+% of institutions. But the reason you need Bitcoin in your portfolio, and all the institutions, every single one of them is going to have it. This is the crazy thing. Every single one of them will, and I've been saying this for years, right? Get off zero. I've been saying since 2017. And all that means is, and I said 10 years, and now we're 6 years in, so it's only 4 more years from now, you will be deemed fiduciarily irresponsible if you have zero.
Renowned hedge fund manager Mark Yusko, a key figure in the cryptocurrency and digital asset space, shares the collective anticipation of investors for significant developments in the cryptocurrency market come January. Bitcoin's price has surged from $26,758 to $39,500 since mid-October, marking a substantial 47.2% increase. This upward momentum is rooted in expectations of the U.S. Securities and Exchange Commission's approval of a spot Bitcoin exchange-traded fund, predicted by Yusko to occur on January 8, 2024, just days before the final deadline for the ARK Invest application. Yusko foresees a considerable influx of new capital into the digital asset space upon approval, as approximately 80% of institutional investors currently have zero exposure to Bitcoin and other digital assets. The regulatory environment in the United States has held back willing investors, but Yusko anticipates that the approval announcement will prompt institutional investors to enter the market freely, leading to a surge in institutional interest and a flood of new capital in early January. In a recent episode of his weekly roundup with Blockworks Macro, Yusko also addresses the ongoing rally in the cryptocurrency market despite regulatory crackdowns. Despite the United States Department of Justice imposing a $4.3 billion fine on Binance, the world's largest cryptocurrency exchange, and its influential founder Changpeng Zhao, the announcement did not dampen the excitement surrounding the prospects for 2024. If anything, it appears to have further bolstered enthusiasm within the cryptocurrency community.
It's a thing of absolute beauty. So we're up 12% in the past 30 days. So it wasn't Moonvember, because it was Uptober, up 29%, but we have 12% in November. So happy December, by the way. And then over the last year, we're up 123%. And this chart is just so beautiful in that you have volatility, which we always do, and you even have a long period, almost 6 months of no movement, but you have higher highs and higher lows, a series of higher highs and higher lows. That is accumulation writ large. This is one of the great accumulation chart patterns that you will see. And if you go back to that 1 month chart, I think it is.
Yeah, here.
That is an absolute thing of beauty. And think about it, in this month, I tweeted about this the other day. In this month, okay, we had a U.S. government agency who shall remain nameless levy the largest fine against the largest crypto exchange in the world, of which it's questionable whether they had any jurisdiction over, but they still did it, forced the CEO to step down from his role. And this chart says, I don't care. I just don't care. And, maybe I need a new hashtag. Bitcoin doesn't care. It is in a massive accumulation. And I said, January 8th, King's birthday. That's the day I believe the approval's going to happen. The first they ignore you, then they laugh at you. It's like a bunch of nerds, geeks, play with your magic internet money, whatever. Then it became a threat. And they're like, all right, we'll kill it. We're going to kill it. And they've tried, right? Multiple times. They've tilted at the windmill and the windmill just smacked them down, like literally smacked them down. Like, all right, we can't kill it. All right, you know what? We're going to take control of it. And here's what you do. You go after the highest profile. Stevie Cohen comes to mind in the hedge fund space. And $2 billion. I mean, it just 3-year ban. It's like, I've heard this story before. And you get a key figure to step aside so you can put your man or woman in the seat, and then you have control. And you can't beat them, join them. That's what's going on here. This is like a hostile takeover. And it's not like a full takeover. It's not like, Gary's going to sit in the chair and pull the strings, but this is absolutely all right, you're too big to kill, but we don't like you. And we want you to play by our rules. And we want you to pay for our budget for the next couple of years. So that's what they're doing. And some would call it extortion or bribery. Others would call it, cost of doing business. It's kind of like JP Morgan in jolly old England. They have a subsidiary that basically spoofs the price of gold all day long, every day. And they make $20 billion a year. And every once in a while, they get a fine of $1 billion. You can go back and read this in the newspaper, right? No one reads newspapers, but online you could find it. And when they asked the guy, are you going to keep doing this? Or he's like, are you joking? It's the cost of doing business, 5%.
Yusko draws a parallel between the legal challenges faced by Changpeng Zhao and that of Steve Cohen, an American hedge fund manager and owner of the New York Mets. Cohen, who founded the hedge fund Point72 Asset Management and SAC Capital Advisors, faced legal issues related to insider trading and financial crimes in 2013. Much like Binance, SAC Capital Advisors agreed to a substantial settlement of $1.8 billion, including $900 million in forfeiture and $900 million in fines. Additionally, Cohen was barred from managing outside money for 2 years as part of the civil case settlement. Comparing the situations, Yusko notes that despite the legal challenges, Cohen emerged relatively unscathed and has since amassed a net worth of about $20 billion, according to Forbes. Yusko suggests a similar resilience for Binance, CZ, and the broader cryptocurrency space, predicting that they will navigate these challenges successfully and continue to thrive. The focus then shifts back to Mark Yusko's interview, where he discusses the anticipated approval of a spot Bitcoin ETF in January and its potential implications for the entire cryptocurrency space.
People, I think, miss sometimes is just the amount of money out there that is in these little boxes, these rule boxes. And there's 30 trillion by Eric Balchunis's, I think I'm saying his last name right.
Balchunis. Yeah.
Balchunis, yep. And, 30 trillion, big number, that can't at this point buy Bitcoin directly, right? But they can, in many cases, not all, buy things like, MicroStrategy or Coinbase because they're listed companies, as opposed to, they like, UBS won't let me buy GBTC, whatever. But when this ETF happens, that's going to be a dicey period because then it's like, well, I don't have to buy MicroStrategy, which is a questionable software business tacked on to a big honeypot of Bitcoin. And I don't have to pay a premium anymore for Coinbase. And I think Coinbase will do well because their business is going to skyrocket, right? Because they're going to do custody for these ETFs and they're going to, get ancillary benefit. And when the institutions really come, because yes, there's an institutional bid, but it's with this many people. I mean, I'm not, and I actually have numbers to back it up because I'm still smiling and dialing and trying to get people to meet. It's crazy how many people in the institutional world are still stuck on zero. Literally zero. It's 80+% of institutions. Now it's funny in the surveys, I think like 74% said, "Oh, we have exposure." I'm like, well, kinda. And what they're saying is, well, we gave some money to this venture capitalist. And we think they have some exposure somewhere. But yeah, okay, fine. But that's not you making a decision to buy a digital asset for all the right reasons, right? The reason to own digital assets is very simple. Let's just talk Bitcoin, and then we can go to the others. But Bitcoin is 0.0 correlated to bonds and 0.15 correlated to stocks. Those are the two lowest correlations of any meaningful asset class, like high yield bonds, hedge funds, private equity, international stocks. If you take anything with, kind of $500 billion and up of value, you could find small things like, stamps or coins that have even lower correlation. But for a meaningful asset class, this is the least correlated of all of them. And so when you add it to a Markowitz framework, meaning, when you take cash, riskiest asset you could ever own because you lose to inflation, and you add bonds, which have more volatility, people are still stuck on this idea of volatility, and volatility is your friend. So what you want are assets like Amazon, like Apple, like Microsoft, not Microsoft, I hate Microsoft, that have this high volatility, but they have long-term accretion to your portfolio. But the reason you need Bitcoin in your portfolio, and all the institutions, every single one of them is going to have it. This is the crazy thing. Every single one of them will, and I've been saying this for years, right? Get off zero. I've been saying since 2017. And all that means is, and I said 10 years, and now we're, 6 years in, so it's only 4 more years from now. You will be deemed fiduciarily irresponsible if you have zero.
In other developments, a recent Federal Deposit Insurance Corporation report signals a potential banking sector crisis looming in the United States. According to the agency, U.S. banks are currently burdened with a substantial $684 billion in losses on securities. The report also highlights a significant increase of $126 million, a 22.5% surge in unrealized securities within the banking system by the end of Q3. Despite the overall strength of the U.S. economy in 2023, the banking industry faces considerable downside risks attributed to ongoing inflation, escalating market interest rates, and geopolitical uncertainty, as stated in the report. These challenges could lead to credit quality issues, earnings constraints, and liquidity challenges for the industry. Another banking crisis would be catastrophic for depositors, borrowers, small businesses, and various sectors of the economy. Conversely, it could be advantageous for the cryptocurrency industry, particularly if it coincides with the approval of a spot Bitcoin ETF. Mark Yusko's predictions and outlook on the industry invite discussion, and your thoughts are welcome in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.